Hi, I'm Jason. Welcome to Smart College Online. Tax planning and preparation are crucial aspects of managing your finances and ensuring compliance with the UK's tax laws and regulations. In this article, we will provide an overview of the UK tax system, including important tax laws and regulations, and explain the importance of tax planning and preparation. Overview of UK tax laws and regulations. The UK tax system is governed by a complex set of laws and regulations that can be challenging to navigate. The main tax laws in the UK include the Income Tax Act of 2007, the Corporation Tax Act of 2009, and the Value Added Tax (VAT) Act of 1994. Income tax is a tax on an individual's income and is based on the amount of income earned during a tax year. Income tax rates in the UK vary depending on the amount of income earned, with higher earners paying a higher percentage of their income in tax. The current income tax rates for the 2020 to 2021 tax year are: basic rate, 20% for income up to £37,500. Higher rate, 40% for income between £37,501 and £150,000. Additional rate, 45% for income over £150,000. Corporation tax is a tax on the profits of companies and is currently set at 19%. VAT is a tax on goods and services and is currently set at 20%. In addition to these main tax laws, there are also a number of other taxes and charges that may apply in specific situations. These include capital gains tax, a tax on the profit made when an asset is sold. Inheritance tax, a tax on the value of an estate passed on to beneficiaries after the death of an individual. National insurance contributions, a tax paid by employees and employers to fund the UK's social security system. Importance of tax planning and preparation. Tax planning and preparation are crucial for ensuring compliance with the UK's tax laws and regulations, and for minimizing the amount of tax that you have to pay. By planning and preparing your taxes in advance, you can take advantage of deductions, credits, and other tax-saving strategies that can significantly reduce your tax bill. Tax planning involves taking steps to minimize your tax liability throughout the year, rather than waiting until tax time to try to reduce your tax bill. For example, you can invest in tax-efficient savings and investment accounts, make charitable donations, or take advantage of other tax-saving opportunities. Tax preparation, on the other hand, is the process of gathering all the necessary information and documents to file your taxes. This includes keeping accurate records of your income, expenses, and other financial transactions throughout the year. By taking the time to plan and prepare your taxes, you can ensure that you are paying the minimum amount of tax required by law and that you are taking advantage of all the deductions and credits that you are eligible for. Tax planning and preparation are essential for managing your finances and ensuring compliance with the UK's tax laws and regulations. Understanding the main tax laws and regulations in the UK, including income tax, corporation tax, and VAT, is the first step in effective tax planning and preparation. By taking the time to plan and prepare your taxes, you can minimize your tax bill and take advantage of deductions, credits, and other tax-saving strategies. One of the most important aspects of tax planning and preparation is identifying and taking advantage of tax-saving opportunities. In this section, we will discuss some key tax-saving strategies, including utilizing tax deductions and credits, maximizing retirement savings, and exploring tax-efficient investment options. Utilizing tax deductions and credits. Tax deductions and credits are two of the most effective ways to reduce your tax bill. Tax deductions lower your taxable income by reducing the amount of income that is subject to tax, while tax credits directly reduce the amount of tax that you owe. There are many different tax deductions and credits available to UK taxpayers, and it's important to be aware of which ones you qualify for. Some common tax deductions include work-related expenses. If you are self-employed or have to pay for work-related expenses out of your own pocket, you may be able to claim deductions for things like travel, equipment, and training. Charitable donations. If you make charitable donations, you may be able to claim a deduction for the amount that you give. Rent. If you are a landlord, you may be able to claim a deduction for the costs associated with renting out your property. Some common tax credits include child tax credit. If you have children under the age of 18, you may be able to claim a tax credit to help with the cost of raising them. Working tax credit. If you work and have a low income, you may be able to claim a tax credit to help with the cost of working. Pensioner tax credit. If you are over the age of 60 and have a low income, you may be able to claim a tax credit to help with the cost of living, maximizing retirement savings. Retirement savings are another important aspect of tax planning and preparation. There are several tax-efficient ways to save for retirement in the UK, including personal pension. A personal pension is an individual retirement savings plan that allows you to save for retirement on a tax-efficient basis. Contributions to a personal pension are tax-deductible, and investment growth is tax-free. Self-invested personal pension. SIPP. A SIP is a type of personal pension that gives you more control over your investment options. It allows you to invest in a wide range of assets, including shares, bonds, and property, and also allows you to benefit from tax relief on your contributions. ISA, individual savings accounts, ISAs, are another tax-efficient way to save for retirement. ISAs are available in several different forms, including cash ISAs, stocks and shares ISAs, and innovative finance ISAs. They allow you to save and invest without paying tax on the interest or capital gains, exploring tax-efficient investment options. Investment plays a vital role in tax planning and preparation. Investing in tax-efficient investment options can help you to minimize your tax bill and maximize your returns. Some tax-efficient investment options include venture capital trusts, VCTs. VCTs are a tax-efficient way to invest in small and growing companies. Investing in a VCT allows you to claim income tax relief of 30% on the amount invested, and any dividends or capital gains earned are tax-free. Enterprise investment schemes, EIS. EISs are a tax-efficient way to invest in small and growing companies. Investing in an EIS allows you to claim income tax relief of 30% on the amount invested, and any capital gains earned are free from. Filing taxes can be a daunting task, but it is a necessary part of managing your finances and ensuring compliance with the UK's tax laws and regulations. In this section, we will discuss some key aspects of filing taxes in the UK, including understanding tax forms and deadlines, tips for accurate and efficient tax filing, and common mistakes to avoid, understanding tax forms and deadlines. The first step in filing your taxes is understanding the different tax forms that you need to complete and the deadlines for filing them. The main tax forms in the UK include self-assessment tax return. This form is used by self-employed individuals, company directors, and anyone with taxable income that is not taxed at source. The deadline for submitting a self-assessment tax return is January 31st of the following tax year. Employer's annual return. Employers are required to submit an employer's annual return to HM Revenue and Customs, HMRC, each year, which provides details of the tax and national insurance contributions, NICs, paid by the company's employees. The deadline for submitting this form is usually the 19th of May of the following tax year. It is important to be aware of the deadlines for submitting tax forms, and to ensure that you have all the necessary information and documents to complete them. If you are unsure about which forms you need to complete or when the deadlines are, you can consult with a tax professional or check the HMRC website for more information. Tips for accurate and efficient tax filing. Filing your taxes accurately and efficiently is essential to ensure compliance with the UK's tax laws and regulations, and to minimize the risk of penalties and fines. Some tips for accurate and efficient tax filing include: keep accurate records. Keeping accurate records of your income, expenses, and other financial transactions throughout the year is essential for filing your taxes accurately. This includes keeping receipts, invoices, and other documentation to support your tax claims. Take advantage of online filing. Many tax forms can now be filed online, which can make the process faster and more efficient. It also allows you to submit your tax return and pay your taxes electronically. Seek professional advice. If you are unsure about how to file your taxes or if you need help with complex tax issues, it's a good idea to seek professional advice from a tax professional. Common mistakes to avoid. Filing your taxes can be a complex process, and it's easy to make mistakes. Some common mistakes to avoid include: filing late. Filing your taxes after the deadline can result in penalties and fines, so it's important to ensure that you file your taxes on time. Failing to claim all the deductions and credits you qualify for. Not claiming all the deductions and credits that you are eligible for can result in paying more taxes than you have to. Not reporting all income. Not reporting all of your income can result in paying more taxes than you have to and can also result in penalties and fines. Failing to keep accurate records. Not keeping accurate records of your income, expenses, and other financial transactions can make it difficult to file your taxes accurately and can result in penalties and fines. Special tax situations. In addition to the standard taxes that apply to all individuals and businesses, there are also special tax situations that may apply in specific circumstances. In this section, we will discuss some of the key special tax situations in the UK, including self-employment and business taxes, capital gains and losses, and the tax implications of buying and selling property. Self-employment and business taxes. Self-employed individuals and businesses in the UK are subject to different tax rules and regulations than those who are employed by someone else. Self-employed individuals are responsible for paying their own taxes and national insurance contributions, NICs, and are required to file a self-assessment tax return each year. The taxes that self-employed individuals and businesses are subject to include income tax. Self-employed individuals are subject to the same income tax rates as those who are employed by someone else, but they are also required to pay Class 2 and Class 4 NICs. Corporation tax. Businesses are subject to corporation tax on their profits, which is currently set at 19%. Value-added tax. VAT. Businesses that have a turnover of more than £85,000 per year are required to register for VAT and charge VAT on their goods and services. It is important for self-employed individuals and businesses to stay informed about their tax obligations, and to seek professional advice if needed to ensure compliance with the UK's tax laws and regulations, and to minimize the risk of penalties and fines. Capital gains and losses refer to the profit or loss made on the sale of an asset, such as property, shares, or investments. Capital gains are subject to capital gains tax, CGT, which is currently set at 20% for higher rate taxpayers and 10% for basic rate taxpayers. There are several tax reliefs and exemptions available to help mitigate the impact of CGT, including the annual CGT exemption, which allows you to make £12,300 worth of gains tax-free in the 2020 to 2021 tax year. It is important to stay informed about the tax reliefs and exemptions available, and to seek professional advice if needed to minimize the impact of CGT on your finances. Tax implications of buying and selling property. Buying and selling property can have significant tax implications, including stamp duty. Land tax, SDLT. SDLT is a tax that is paid when buying a property. The amount of SDLT that you have to pay depends on the purchase price of the property and your personal circumstances. Capital gains tax, CGT. If you make a profit when selling a property that is not your main residence, you may be subject to CGT. Inheritance tax, IHT. If you leave a property to someone in your will, it may be subject to IHT. It is important to stay informed about the tax implications of buying and selling property, and to seek professional advice if needed to ensure compliance with the UK's tax laws and regulations, and to minimize the impact of taxes on your finances. Special tax situations can have a significant impact on your finances, and it is important to stay informed about the tax laws and regulations that apply in these circumstances. By understanding the tax implications of self-employment, capital gains and losses, and buying and selling property, you can take steps to minimize your tax bill and maximize your returns. Tax planning and preparation are crucial aspects of managing your finances and ensuring compliance with the UK's tax laws and regulations. Throughout this course, we have discussed a wide range of topics, including an introduction to the UK tax system, tax-saving strategies, filing taxes, and special tax situations. Recap of key takeaways. The UK tax system is governed by a complex set of laws and regulations that can be challenging to navigate. Tax planning and preparation are essential for managing your finances and ensuring compliance with the UK's tax laws and regulations. Tax-saving strategies such as utilizing tax deductions and credits, maximizing retirement savings, and exploring tax-efficient investment options can help you to minimize your tax bill. Filing taxes in the UK can be a complex task, but by understanding the tax forms, deadlines, and seeking professional advice, you can ensure compliance with the UK's tax laws and regulations, and minimize the risk of penalties and fines. Special tax situations such as self-employment and business taxes, capital gains and losses, and the tax implications of buying and selling property can have a significant impact on your finances, and it is important to stay informed about the tax laws and regulations that apply in these circumstances. Additional resources for further tax education and support. The HM Revenue and Customs, HMRC, website. This is an excellent resource for staying informed about the UK's tax laws and regulations, including tax forms, deadlines, and tax reliefs and exemptions. The Chartered Institute of Taxation. Thank you for watching. We hope that the information provided in this course has been helpful to you in understanding the complexities of tax planning and preparation in the UK. If you have any further questions or concerns, please feel free to leave a comment on the video and provide us with your feedback. Your feedback is important to us and we appreciate your support.